Hello, and welcome to ESSA School Level Reporting Financial Transparency from the DPI School Financial Services team. This video is Part 2, Reporting Format and Exclusions. In Part 1, we covered that school level reporting is a new federal financial transparency requirement for districts and LEAs and for DPI. It will start with budget reporting for the 2018-19 school year. Districts and LEAs will report expenditures by school, split into federal, state, local, and exclusion categories. To date, there has been no specific guidance from the U.S. Department of Education on this reporting requirement. Over the past couple of years, DPI has worked with 38 other states, over 20 major school districts, and experts at Georgetown University. The result of those discussions has been the Interstate Financial Reporting Framework for school-level reporting. With this framework, states have agreed to report their information for school-level reporting in a consistent format. The first item reported is enrollment. Districts and LEAs will report a non-weighted student enrollment. That is, all students will be counted as one FTE. In Wisconsin, we count a 4-year-old kindergartner as 0.6 FTE for funding purposes, but we will not use that for school-level reporting. Enrollment will reflect who educates a particular student, where they attend school, what we call head count, rather than where they live, what we call membership. In school-level reporting, each state will list its count procedure. In Wisconsin, we will be using the third Friday of September head count. Next are school expenditures, which are per-pupil costs for teachers, support staff, supplies, and equipment that are identified or allocated at the school level. These will be split by their funding source into the federal and state-local categories. Similarly, per-pupil costs for administration, central services, buildings and grounds, and other costs common to the entire district or LEA will be reported at that level. Again, district LEA expenditures will be split by funding source into federal and state local. These costs will be divided equally by enrollment. That is to say, when you look at a given school in your district or LEA, it will have the same school share of district LEA expenditures numbers as every other school. Finally, we will combine the per-pupil total for costs that are specific to each school you've reported, plus the district or LEA-wide per-pupil total that has been reported for costs at that level, to arrive at a total per-pupil student expenditures. This will be the number that media, policymakers, advocates, and the public will focus on for comparing schools. And let's be honest, these numbers will be used for comparison. Think about who are the different audiences for this information within your district, your LEA, within your community. How will your staff, your administrative team, your board members, your community members, or local media interpret these numbers? You'll also want to think about who are the different audiences for this information on a state and national basis. Finally, we will be reporting totals, not per pupil numbers, for exclusions and for total expenditures. Exclusions are costs that we are not including in the per-pupil numbers that are reported for the school or the district LEA as a whole. Therefore, the total district expenditures is just a total dollar amount for everything. All the costs that are reported as school or district on a per-pupil basis, plus the exclusions. Our expectation is that a school district's total expenditures will match their totals from the PI 1504 and PI 1505 budget and annual reports that districts are required to submit. Reporting will also include a list of all of the exclusions that the district or LEA is using for school-level reporting. So, what is an exclusion anyway? The ESSA requirement is to report actual per-pupil, personnel, and non-personnel costs. In our discussions with other states, districts, and national experts, the question came up: what about costs that are not directly associated with the education of our students in our schools every single year? The answer to that was to create exclusions to account for these sorts of expenditures. The The school finance team worked with the Wisconsin Association of School Business Officials to convene a work group on school-level reporting. One of the things that work group came up with was a list of recommended standard exclusions to ensure consistent reporting between districts and LEAs. Your district or LEA may choose to deviate from this list, but you should be prepared to explain why you are reporting something as an exclusion that your neighbors are not. Now we'll go through the list of recommended standard exclusions. Note that the woofer column shows the account coding associated with each recommended standard exclusion. Aid transits. These are state and federal aid revenues that your district or LEA receives, but they really belong to another educational agency because they have contracted with you to provide a service. Capital projects. These are things like new buildings, major renovations, land purchases, the sorts of major improvements to facilities and sites that a school district will often hold a community referendum for. Certain non-accountability students. In a few cases, a school district may have costs for educating certain types of students who are outside the statewide accountability system. This could include private school or homeschooled students who attend 1 or 2 classes, as permitted by state law, adult students completing an HSED program, homeless youth not enrolled as students but receiving services as required by the federal McKinney-Vento Act, or your resident students attending a multi-district virtual charter school operated by another district. Costs associated with these students outside of the accountability system are part of this recommended standard exclusion. Community services. In Wisconsin, school districts are permitted to offer community programming outside of their normal educational program for school-aged children. Cooperative programs. Multiple districts and other educational agencies can get together and form a cooperative program. One of those agencies serves as the operator or fiscal agent of that program. If your district or LEA is the fiscal agent, then this exclusion is meant to account for the other participant's share of the cooperative program. Only your costs associated with your students should be included for school-level reporting. Debt service. These are the principal and interest costs, along with any associated fees, for long-term debt. Equipment. Major equipment and other objects that are above your district or LEA's threshold for capital purchases are included in this exclusion. For many districts, this means any item or piece of equipment with a unit cost of more than $5,000, which is expected to last over several years. Facilities. Any costs associated with acquiring or remodeling a district or LEA's facilities, but is not being accounted for in a district's capital projects fund, is listed here as an exclusion. Food service. The school-level reporting work group is recommending that school lunch, breakfast, elderly, and other nutrition programs operated by school districts and LEAs be excluded from school-level reporting. Independent charter tuition. The 2015-2017 Wisconsin State Biennial Budget created a new set of entities able to authorize independent non-district charter schools. The funding model for these schools is similar to open enrollment in that a student's resident district has state aid deducted to fund payments to the charter operator. These are accounted for by the resident district as a tuition payment, and those payments are recommended to exclude for school-level reporting. Interfund transfers. These are not actual expenditures, but rather artifacts of the woofer accounting system to allow a district or LEA's books to balance as a whole. Private choice tuition. These are payments of state aid withheld to support a district's resident students who are attending a private school and receiving a voucher under the Wisconsin or Racine Parental Choice Programs or the Special Needs Scholarship Program. Public choice tuition. These are payments that record state aid withheld to fund a district's resident students attending another district under public school open enrollment. Teach Fund. Several years ago, the state had a TEACH program to expand technology access statewide. Most districts have spent down these funds, but a few have a residual balance in their TEACH fund, which can be used for debt or equipment under that program. Trust funds. A district or LEA may hold funds in trust for a private purpose. These do not actually belong to the district or LEA. This includes endowments for scholarships and advance funding for retiree benefits. Now, one question we've gotten a number of times is, what about Fund 60, the Student Activities Fund? It is not included as a recommended standard exclusion because under WOOFR, the Student Activities Fund does not record expenditures or revenues. It is a fund that exists only on the balance sheet. There are no expenditures to exclude for Fund 60. One thing to point out is that in school-level reporting, if a particular recommended standard exclusion does not apply to your district or LEA, you are not required to report it. For example, a district with no debt may well want to choose not to report the recommended standard exclusion for debt service. That would be accurate and is perfectly acceptable to do. If your district or LEA is considering an optional exclusion, ask yourselves whether the cost represented by that exclusion truly is or is not an actual personnel or non-personnel cost. All right, here are our takeaways from school-level reporting Part 2. 39 states, including the Wisconsin Department of Public Instruction, have agreed to use a common format for school-level reporting. A district or LEA's school-level numbers will vary from school to school, but the district-level numbers will be the same for every single school. Most importantly, it is that total per-pupil expenditure number, line H in this format, which will attract public attention and discussion. In our next video, we will go into detail on the school-level reporting application, which is how districts and LEAs will report data for school-level reporting to DPI. For more information, you can visit the School Financial Services webpage or email the School Financial Services team. Thank you.